Welcome to Southwest Florida Real Estate Update, hosted by area realtor Jim York and York Real Estate Group of Downing Fry Realty. Our show will bring you the most up-to-date information about the local real estate market, featuring leading experts in the real estate field.
Good afternoon and welcome to the Southwest Florida Real Estate Update. I'm Michael York with the York Real Estate Group, and I'm joined today by our host Jim York and his guest Don Ross, President at Ross Title and Escrow.
Thank you, Michael, for the introduction. Well, we're here today with Don Ross, and thank you for coming on the show again. Don, we're going to talk about today closing costs, but before we get into that, I'd like to have you introduce yourself and your company here in Naples.
I'm a Florida attorney. I've been a member of the bar since 1982. I'm a partner in Ross, Lanier & Dyfick for over 20 years. Ross Title and Escrow we've had for over 10 years. I have a group of 8 ladies, paralegals, pre-closers, post-closers, and myself who handle primarily closings, and quite a few of them.
And your location?
Location is right on 41. It's 599 9th Street North. Or as I explain to people, it's across from Pastrami Dan's. It's at the corner of 6th Avenue North and 41.
Well, one of the nice things from dealing with you over the years is that you always get somebody on the phone.
Oh, thank you.
With your team that you have there, it's not you're getting voicemails, or you even, I know, give your cell phone out to people that if they have a question, they can call you directly. Is that true or not?
No, it's absolutely true. I was raised by a salesman. I'm told we're all in the sales business. People like to talk to a real-life human being. I'm a firm believer in getting phone calls returned every single day. Even when I'm not there, somebody returns my call to the office, and everyone has my cell phone.
Well, Don, we have a lot of people moving into the area here, and they're from up north, and a lot of people aren't familiar with our closing cost in Florida. So what I'd like to do is maybe break up our show into 3 different segments, okay?
Okay.
And the first segment maybe is talking about putting a team together. And then our second segment maybe we'll talk about what cost there is on a closing statement that maybe a bank would have to put on, or other things that would be on the statement besides your fees. And then the final would be your fees or title insurance, other fees that would be related to the state fees that we have here in the state of Florida.
Okay.
So maybe the first segment here, maybe you just talk about the team concept of working with a buyer or a seller with you and other people.
Well, I find that doing as many closings as we do, the ones that go smoother, most effectively, fewest amount of surprises, are closings where there's an experienced or knowledgeable realtor involved. And any knowledgeable realtor that I deal with tends to have a team that they recommend to the seller or the buyer. They'll have a title company like mine, or an attorney that they can get on the phone if they have a question. They'll have inspection companies they work with. They have repair people they work with that they've had good experience with in the past. And they have enough knowledge of the contract and so forth that they can go over the contract with their clients and alert them to, this is what it's going to cost, here are the timelines, here's what you can do, here's what inspection items you can raise or not raise. So, I mean, having a good team is critical. One weak link in the chain is enough to create anxiety in the group, and once anxiety starts, it's like a wildfire. It spreads through the entire group, and at that point, the seller's screaming, the buyer's screaming, everybody's anxious over some minor issue. And it's literally a minor issue, but if you don't have the right team, you're dealing with folks from up north. They don't know how we do things down here. It might be their second purchase their entire life, and all they know is you.
Right.
They know Jim.
Right.
So you've got to refer them to the right people for the inspections and so forth to make the whole process go smooth.
Yeah, and I think it's important that when you're putting that team together, at least how we've done it, is that the people we put together, if it's a closing agent or a bank or inspection person, that there's good communication within all of us, that people do it in a timely fashion.
Sure.
They return phone calls. That's why I put a little emphasis on, at your office, you can pick up the phone and somebody will answer the phone, versus getting a voicemail that they say, well, we'll call you back by 5 o'clock today or early the next day.
That's the kiss of death. I mean, in any business, I think, where you have to go through, and we all go through it. I go through it. I mean, I can't stand calling a company and waiting for what option I am and pressing that. And halfway through it, I hit 0, hoping I'm getting a real live body. You want a person. You want some acknowledgement that your message was received.
That's right.
Not just leaving it on a digital device. I mean, somebody heard it and somebody's going to do something. Yeah. Otherwise, again, people get anxious.
Yes.
And it ripples.
So I think we've covered that part of putting the team together. I think the next part in a closing statement, when people are reading it, they need to understand when they see that they're going to have to come up with so much money for closing costs, what typically is shown on the closing statement. And maybe you could just go over that with our viewers a little bit.
Well, we have cash and we have non-cash closings.
Right.
And I brought a closing statement from my office, and this one has a mortgage. And typically what you have, here's the closing statement. It's 3 pages long, this particular one.
Let's start with what the bank fees would be maybe on it, and then we'll go on to the other segment of it.
Well, as a preface to bank fees, when somebody applies for a mortgage, by federal law, they're supposed to get a good faith estimate from their lender within 3 days of the application. So they should have some heads up on the types of costs that would be incurred relating to that loan. And I get a lot of folks who say, I got this good faith estimate, and they say it's this much for title insurance or this much for dock stamps. What's dock stamps? Could you please look at it, Don, and tell me if this is out of line? Is this consistent with Florida law, or is it something exorbitant? So you should be asking for your good faith estimate. But when you get to the closing itself, I mean, that's not the first time you should be seeing these fees.
Right, exactly.
You should have seen them a long time ago and gotten your explanations. And me as the closer, I haven't seen the good faith estimate. That's between the borrower and the bank.
Right.
So I'm going over the closing statement with the client after I get the fees from the bank, which is usually the day before closing.
That's right. It usually is.
But the typical bank fees on the second page of the closing statement, they have an origination charge.
Right.
Now, origination charges are going up. I mean, we've had the Dodd-Frank Act that was effective last year. We have new regulations going into place October 1st that is causing the cost of compliance for lenders to go through the roof. And one particular lender in town, I called the lender and I told him about this show. And I said, what do I say about bank fees? And he says, well, tell them origination fees are going up because they have to hire more compliance people. So their typical origination fee used to be $850. Right. And now it's like $1,750.
Is it really?
It's somebody I won't mention the name. But it's strictly to hire people to keep the federal and state government happy. Right. With that everything's being done correctly, that things are being done in a timely manner. It almost seems like the degree of micromanaging has definitely gone up, and it's costing the average guy in the street more money.
It is in everything, in healthcare, everything.
Well, it's every industry, but that's the first fee. So the origination fee is what's going up because of these charges. Then there's points, which you can buy down the interest rate of your loan, which is a percentage of the loan. You have the appraisal fee, which could, depending upon the size of the transaction, and this $300,000 deal was $450. Right. Okay, and they look at comparable sales and determine if the property is worth enough to lend that amount of money. Right. An appraisal fee, $45. They do a credit check. They charge about $10 or so for that. A tax service fee. They're going to keep track of whether the tax bills are paid and what they are, and in most cases the banks will escrow and pay for that. Flood certification. Right. They're going to want a survey. It's not listed as a bank fee per se, but the bank's going to require a survey for sure.
To see if they require flood insurance or not. It's an elevation fee.
Well, they want to see that, but also they sell these loans for the most part on the secondary market. Right. They put them in big blocks of $10, $20, $30 million and sell them, and And in order to do that, you have to have uniform documents, Fannie Mae, Freddie Mac documents, uniform standards that are adhered to in all the loans. And one of those is having a survey on a residential property. They want a survey. They want to make sure the house isn't encroaching into a setback or an easement, something that might affect the value of the collateral. If they have to move it, it's affecting the value of the collateral. So those are the bank fees in general. Their business is getting, though, more demanding. People tend to want to close in 2 weeks. They want their lender to process this right away, right at the same time that the federal government is imposing all these additional requirements on lenders and title companies and attorneys. They want it faster, and we're doing more at the same time. So look for your good faith estimate. You have questions, you call your team leader, which in this case would be you. And would you look at this, Jim, and you'd forward it to me or somebody you're working with, and ask that person to explain it to the client. Because again, they're from up north. They're not used to doc stamps. They might be from New York, where they have a nice, state income tax, and this is entirely foreign to them.
Don, we're going to just take a little short break, and we're going to be back with Don Ross, and we're going to talk about the cost of closing on his end.
When picking a realtor, don't just pick anyone. Pick someone with experience. Pick someone with a proven track record. Pick a realtor like Jim York from Downing Fry Realty, the #1 brokerage with the most real estate transactions in the area.
My husband and I had very specific ideas about what we wanted in our new home. Jim York was able to help us find the home that was ideal for us.
With over 20 years of real estate experience in Southwest Florida, Jim York has negotiated over $200 million in sales contracts. Selecting the right realtor is a critical decision that can earn you thousands when selling or save you thousands when buying.
Jim also helped us with a mortgage lender and a good real estate attorney. He went that extra mile, and his experience says it all.
Call Jim York for a no-obligation meeting at 239-273-6727 or visit his website, www.naplesyorkrealestate.com.
Welcome back. Don, let's just go into the last segment of the closing cost, and that really pertains to a lot with you here. So maybe you could describe what your fee is, what title insurance cost is, or doc stamps, and go from there.
Well,
recording the deed.
Sure. Well, let me get the easy ones out of the way first. Because again, Florida doesn't have a state income tax, the state needs to raise money somehow or another to run the government. So we have transaction fees. We have taxes on the deed, documentary stamps on the deed, $7 per thousand. So on $100,000, you're paying $700 in doc stamps on the deed. And it's usually the seller who pays that. Mortgages, there are two separate taxes. 2 mils on the mortgage, and I don't know if people are going to get this, but there's the mortgage and there's the promissory note. They're actually two separate instruments. The $2 per thousand on the mortgage, which is called millage, and then there's 35 cents per 100 on the promissory note, which is documentary stamp tax. Now, translating that into English for a regular human being, I tell people it's roughly $5.50 per thousand. So if you're borrowing $100,000, it's $550, both the intangible tax on the mortgage and the documentary stamp tax on the note put together. Now, if you were answering this question on your real estate exam, you might be 35 cents off because you're supposed to round up on each one of those to the nearest dollar. And I'm not doing that. I'm just combining it so that a regular person can wrap their head around it and understand
But if they don't have a mortgage, they don't have to pay that.
They don't pay that. And you get some folks from up north who have, they own their home in New York free and clear. They can get an equity line in their house and avoid that, and they'll do that. If it's a big enough deal and it's worth their while, they'll do that. But that's only with mortgages and notes. Now, where I come in, real estate title insurance is a very competitive business in this community, and it's handled in many different ways in other states. I charge the promulgated rate through the title company, which is so much per thousand. There's a book. They tell us how to calculate it. It's $5.75 per thousand on the first 100,000.
Right.
So it'd be $575 on the $100,000 owner's title policy.
Right.
And then it's $5 per thousand from the 100 to $1 million. And then it drops down to $2.50 from $1 million to $5 million. So
Okay.
it's a blend.
It is a blend.
It's a blend. And under the Butler Act, or the Butler Supreme Court case, people can actually negotiate the portion that goes to the agent with them. Now, in reality, you know, unless it's $1 million or more transaction, there's not enough of a profit to negotiate away. I mean, me as a title agent, if I'm doing a $200,000 deal, I'm not really making that
That's
much.
right.
I'm looking for repeat business and word of mouth and
Right.
things of that sort. But you know, on a $2 million transaction, you know, there's room to negotiate. And again, on a cash deal, you can go with that. There's usually a settlement fee in addition to that that pays for out-of-pocket expenditures like the search and any FedExes and things of that sort. And that's usually, ours is $255. When you have a loan, that settlement fee goes up because there's a lot more you do.
paperwork, right.
There's a lot more paperwork and things you have to order and so forth. Attorney's fees, the only time I charge attorney's fees is if I'm clearing a title issue, and it's a living nightmare. It has to be really bad for me to go out of my way, because I go for volume. Or if I'm just representing the seller under a standard Naples Board of Realtors contract, then we'll do the closing through the law firm, and I'll charge a flat fee. If it's a repeat client, I try to give them a break to say thank you for coming back. You know, anything to show some appreciation is good. I don't charge anything for people to come in and prepare a contract. It's one of those marketing techniques I use. I get a lot of FSBOs, for sale by owner, no realtor involved. Get everybody around the table, and you make sure they all understand the document, who's paying for what the time periods are. The better they understand it, the less apt there is to be an issue down the road.
Right.
I mean, that's truly the way I look at it. Nobody's under any compulsion to use me for any part of this. But I certainly don't want to be in the middle of a lawsuit, so I want them to understand what they're signing. Other charges from us, I mean, that's really it.
How about recording fees? Or?
Oh, the recording fees, it's $10 for one page, and then it's $8.50 for every page thereafter. So when you get your loan packet, and we'll find out a day or two before, you know, how thick is it?
Right.
And is it, you know, 30 pages? Well, it might be, you know, $325.12.
Right. Okay.
You know, that's the inexpensive part. And then you have all the, you know, the surveys and inspections. You'll have escrows for insurance and taxes if there's a loan, but that's something that you'd have to pay anyways. The bank just wants to make sure that it's paid. You get people from other states who are used to different systems, and they might not realize we pay our taxes in arrears, or they could travel a lot and they might miss a payment. So anything that would affect the validity of the bank's lien or the value of their collateral, they're going to make sure that you escrow for it and that that's paid.
How about how long after they close do they get a copy of the deed?
They get a copy, well, by law we're supposed to now, well, actually starting October 1, by 30 days.
30 days.
You know, it might be 60 days.
Okay.
I mean, as a practical matter, we get the deed, we send it down that day or the next day. It's recorded, but it's put on some clerk's desk.
Right.
They have to input it, and then they mail it back to us, and then we order another search, because people get title insurance from, you know, right up to the point their deed is recorded.
Right.
So we do a follow-up search right up to that point, and
really?
the policy is effective as of that date.
Okay.
Okay, so that's one of the virtues of title insurance. They get coverage for the gap period, what happens between when we first look at it and what happens, you know, right up to the point their deed's recorded. And I've had a multiple of cases where the worst nightmare was $1 million criminal federal forfeiture lien filed against a condo, the seller and the condo, on the day of closing.
Wow.
And I had to stop payment on checks. It was a nightmare. But having title insurance avoids that, and what people up north might not appreciate is that this is a wealthy area, and if there's fraud or graft or criminals out there, they tend to be attracted towards where the money is.
That's right.
And if anything, you need to be more careful. 'Cause you and you have people from all over the world.
That's right, yeah.
You know, down here who, just don't know. So you just have to be a bit more careful.
Okay, Don, we're going to take a little short break, and we're going to come back with a question from Michael that we had from our website.
Oh, okay.
Okay.
Thinking of buying or selling a home in Naples, Marco, Bonita, or Estero, Florida? Think of the most experienced York Real Estate Group associated with the #1 brokerage in Naples, Downing Fry Realty, which produced $1.9 billion in sales in 2014, controlling 43% of all transactions in Naples. Jim, Michael, and Morgan York make up the York Real Estate Group of Downing Fry Realty. With over $250 million in sales transactions, they can offer you the expertise and trust you want and need in a Realtor. Call them today at 239-273-6727 or visit their website, www.naplesyorkrealestate.com.
Don, as many of our clients come from up north, could you explain some of the key differences between an abstract title and title insurance?
Great question. Probably the best way to explain it would be with an actual example involving my family. I'm from Massachusetts. My in-laws still live up there. My father-in-law, my mother-in-law, they live in Sagamore, Massachusetts. They have abstract title. They have title companies in Massachusetts. My father-in-law sold 40 acres in Hingham, Mass. years ago. He had an abstract title. An attorney prepared it. The attorney gave an opinion of the title. The attorney made a mistake. And my father-in-law, and because I heard about this incessantly because I'm the lawyer in the family, had to pay $50,000 to correct the mistake.
Oh my
okay,
gosh.
and he hired an attorney from Plymouth, Mass. to do this abstract title. And the man made a mistake, and it cost my father-in-law $50,000.
Wow.
Well, he sold his first home in Hyannis and was moving to Sagamore, and my lovely wife told me that her dad was doing this, and I said, well, I'm going to get involved this time. I'm going to make sure I don't listen to any more stories about lost monies. And I called my underwriter and asked, do you have a title company in Massachusetts? Yes, we do. Oh, great. Well, will you handle my father-in-law's transaction? And the title companies, they're big national underwriters. They have hundreds of millions of dollars. You can look up their rating. They're publicly traded. They're not human beings. They're going to die tomorrow and possibly be insolvent. They're large. So I was able to arrange for my underwriter to handle my father-in-law's transaction in Sagamore and give him real live title insurance from a massive underwriter with lots and lots of money, rather than Don Ross, who could keel over tomorrow and nobody knows what I'm worth except my accountant and my wife. The opinion is only as good as the solvency of the person and their willingness to step up to the plate and write the check when they make a mistake. And when he sold the property in Hingham, that attorney wasn't willing to step up to the plate and write the check. So when I heard again that he was doing this, having another transaction, I said, okay, I'm the real estate lawyer in the family. We're doing it my way, and it's been fine. So the difference again, and we had this in Naples too, and it's still prevalent up in New York. I have family that does this in New York. I have a cousin who's a vice president of a major company in New York, a title company, and they do it differently everywhere in the country. I have a client I've done 70-odd closings for from Arkansas, and he just sends somebody down to the courthouse. He spends hundreds of millions of dollars, and he pays the guy $500. For that kind of money, I would rather just have title insurance from a large company that's publicly traded, that you can look up its rating, it gets evaluated regularly, and you have a written product that you can make a claim on, and I know for a fact they pay. I've seen it. So that's the difference.
Sure, it's just like an insurance policy.
Yeah, it's a person versus a big company.
That's right.
A big, solvent, publicly traded company.
Well, Don, I appreciate you coming here today, and I'm sure our viewers have learned a lot, and I'm sure if anyone has a question, they could either call you or myself, and we'll be happy to help them, right?
Thanks, Jim. Appreciate it.
Thank you, Don.